our weekly recap of what's happened in markets over the past week. Markets have recovered quite nicely with strong corporate earnings helping US equities to rebound. The S&P 500, the Nasdaq and the Dow all up between 1 and 2% for the week, although they remain below those recent record highs. The Fed has once again held rates unchanged, but an unusually high number of dissenting policymakers have signaled concern that the rates may need to rise further to contain those inflation fears. Bonds have those persistent inflation concerns again pushing them up, with US Treasury yields sharply higher, the 30-year reaching 5.25%, again its highest since 2007, with the 10-year yield rising to 4.71%, reflecting again that expectation of higher rates. We've seen exceptional earnings in terms of the earnings season, with strong results from your major technology companies lifting those earlier expectations. Analysts now expect the S&P 500 second quarter earnings growth to be around, believe it or not, 47.4%, which is the strongest quarterly increase in 5 years. Economic growth, though, in the US is slowing, with GDP moderate at around 1.5% in the second quarter, falling from its previous 2.1% as weaker government spending and inventory investment offsets that resilient consumer spending. Inflation, though, has eased somewhat a little, with the Fed's preferred inflation measure, that core PCE, showing further moderation. July's performance has been relatively mixed, with the S&P 500 ending July marginally lower at that 0.1%. The Nasdaq, though, fell 3.2%, while the Dow Jones gained 0.3%, extending its winning streak to 4 consecutive positive months.